Hi and welcome everyone to today's session. My name is Daniel Torsson, analyst at ABG, covering IT and technology companies. Today with us we have CEO Jonas Hasselberg from Proact, who's going to present the company in a few minutes. And then I will continue with some questions at the end to get to learn Proact better and understand their momentum in the market and the future outlook as well. So please go ahead and welcome Jonas.
Thank you. Thank you for having us. Well, good morning or good day or whatever the time is. So I'm the CEO of Proact. We are a Swedish tech and IT company. We are turning 30 years old this year, so we've been in the business for quite some time. We deliver IT infrastructure to large enterprises across Europe. So we deliver the underlying technology platforms for our customers, typically mission critical solutions that drives their own business. We operate in 12 countries across Europe, and our primary, value to our customers is that we're very good at what we do, and primarily we're very skilled people in our organization that help our customers really solve difficult IT and tech challenges. We do a lot of cloud services to our customers. We do consulting services, and we also help them with their own infrastructure, so equipment and software solutions that are based in their own data centers. We have a whole range of services and products that match our customers' full needs for their infrastructure.
Excellent.
Yeah.
Thank you very much. That's a good introduction. I start off with a question on the general trends in the market here. You said that you are a provider of services, but also hardware products and cloud solutions for your customers.
Right.
Who are the customers really? Are they public organizations, SMBs, LCPs, and in which markets are you operating?
We are primarily serving large and mid-sized enterprises, both public and private. Typically, we help them with their most important core infrastructure. So most of our customers do something that is mission critical using IT. They transform the business. It could be anything from analyzing huge amounts of data, remote analytics of X-rays, payment flows, software as a service providers running their core infrastructure. So there's a lot of different use cases. But definitely the common denominator is it's advanced complex technology, typically mission critical, and they use a mix of different cloud and what we would call on-prem solutions, so things in their own data centers or in their own data, in their own ownership, you could say, of the equipment. Like I said, we operate in 12 countries in Europe. Sweden is still our largest market, but also Germany, UK, Netherlands, Belgium, all of the Nordics are important markets for us.
Excellent. And my second question is on complexity. You mentioned this as well. The IT environment is getting more complex, especially for larger companies,
Right.
Which means that you can't really have standardized solutions for them. Is it important for you to tailor-made solutions to manage their IT environment as well? Or how complex is your delivery really for the customers?
Yeah, but it's quite interesting because a lot of people, I think, believe that IT is becoming easier and easier. It should just work. But I think it's the other way around. The technology development pace is incredibly quick, of course. And it's difficult for customers to just keep up with this pace. And their choice of solutions is just increasing all the time. So yeah, I think our customers need more help than ever. The complexity is definitely increasing. We do a lot of, just like you said, tailor-made solutions, but we do it with standardized services. So we have a way of having standardized our own, let's say, building blocks. It's almost like Legos. So we have different services, and we can combine them in ways for our customers that makes it unique for them, but not so that we have to have, custom solutions for every customer. Yeah. So that's an important part of our strategy as well, to be able to be scalable effectively, deliver services to many customers without having to have dedicated teams or dedicated solutions.
True, that makes sense. And then if we look at some sub-trends in the market that is driving IT investments and the market here really is obviously AI, artificial intelligence, and cybersecurity, with all of the hacker attacks we have seen lately. How are you exposed to that? How can you help your customers with that? Are you gaining from that development, or how is that playing out in your situation?
No, we are indeed. Both of those trends are important. There's typically two underlying general trends, I would claim. One is just the need to use IT to drive your own business as a customer. And then the other one is to use modern cloud technologies. And cloud in a very broad sense. It doesn't mean the Microsoft and Google cloud, it could be any type of cloud, but it's a, let's say, a technology trend that gives you a lot of flexibility and speed of innovation. So those are underlying and been for a long time and will continue to be underlying, I think, for quite some time. Cyber crime, cyber attacks has definitely been a trend that's not so positive, but is driving a lot of demand from our customers. Everything from very traditional stuff like secure backups, the ability to recover after an event is just more important than ever. Things we've been doing for 30 years and has actually been almost perceived as boring is now in and cool again. But also a lot of security services, monitoring, protection, vulnerability assessments, all sorts of security services obviously also becoming very important.
I see. And then a vast majority of your revenues today are still system sales, so some hardwares and servers, and so that's like 60% of revenues last year. And that's quite volatile over years, over quarters, and likely with the lower margins, less effect on earnings, but big effect on top line. In 2023, they declined some 9% organically, and they typically goes up and down every second or third year. How should we think about 2024 outlook in terms of hardware spending generally, your possibilities to grow that system sales business in 2024?
So system business will continue to be important. You mentioned AI before. It's an interesting example where companies that do AI typically do a lot of their piloting and kind of learning how to do AI in different cloud solutions. Microsoft would be a perfect example, obviously, with their collaboration with the OpenAI team. But when you start building this in production scale and you want to cost optimize, we do expect that people start bringing it home and buy their own equipment because they really want to optimize the performance. So that's a good example of new use cases, but probably will drive what we call system sales. So hardware and software in our customers' own data centers, in their own operations. We typically say that it's a market that still grows for a few percent per year or with a few percent per year. But you're absolutely right. We saw just last year and the year before huge growth and then a bit of decline. So it is a hard market to predict. But I think if you kind of extract it over a couple of years, small single-digit growth probably, driven by new use cases like AI.
I see. If we look at your total growth target as a company, it's 10% per year, including M&A. So it's not that much organic. How should we think about the organic share versus the M&A share of that 10%?
Yeah, we typically say that we should be able to do 50-50. So half of our growth should be organic and the other half should be through M&A. I think if we look over the past 5 years or so, we have been growing with 10% on average. But obviously we do growth spurts, sometimes driven by M&A, sometimes driven by just pent-up demand in the market, like after the pandemic. So we definitely believe that we can grow organically by 5% at least over on average. So
I see. And then the other 5%, you mentioned M&A. What are you really looking for? I remember 6-7 years when I started to look at Proact, the company acquired some hardware resellers. They would like to transfer them into services businesses or more software reselling. That was hard. And then you shifted and started to buy services organizations and then tried to push the system sales a bit. How should we think about the strategy ahead, M&A-wise?
Strategy is more towards services-heavy companies. Definitely companies that are complementing our portfolio. So we love companies that have another set of expertise than we already have. Definitely companies that can add market share to us as well. So size is good, not crucial, but good. We have a couple of examples. We acquired a company here in Stockholm a few years ago, not so big, but they brought in an area of expertise that we didn't have, and we've been able to productize it. So they were a consulting company. We took their expertise, created effectively I would call it a container as a service. So containers is a very, let's say, modern modern application development technology for rapid application development. And we can deliver that platform as a service to our customers now. So those are good examples. We buy expertise through a consulting company, for instance, and we can productize their offering through our services and our operational skills. Cloud services also important. So any expertise around Microsoft Cloud, Google Cloud will be interesting. Networking and obviously security are all good examples of areas of expertise that we want to bring into the company.
I see.
So consulting services companies would be our priority.
Yeah, and that will obviously help you on your margin trajectory, reaching the 8%.
It will indeed.
EBITDA margin target.
Yes, exactly. So we're running right around 6.5% EBITDA right now.
Yeah.
We promised the market to go to 8. There are two things that are, or maybe three things that are the drivers for that. One is definitely the shift to services, because services gives us a slightly better gross margin and scalability. We have still work to do, although we're doing really good progress on building efficiency into our delivery organization. This is all about standardizing delivery and automating it and being able to deliver over multiple countries. And then M&A just to continue accelerate our scale. But those are all in good progress.
Yeah. And how should we think about time frame reaching the target? I mean, it's quite, you have said mid to long term or something like that, not a specific year or a number of years or anything. How should we think about that? I mean, how reachable is the target, or is it something that you're happy that you come close to? Or
no, we want to reach that target, and we think it's doable within our planning horizon. But I'm equally surprised, as many others maybe, that the world throws a curveball every now and then. Obviously, we live through pandemics and semiconductor shortages and inflations and everything. But I think generally the market is definitely there for us. We are operating in a rapidly growing market, and we are able to make that shift. And you can see we started reporting our annual recurring revenue, or annualized, I should call it, annualized recurring revenue about a year ago, and we have a really good trajectory on how that grows. And that is just, I think, a leading indicator that we are able to shift the business and drive towards that more high-margin services business.
Yeah. And regarding M&A multiples, is it difficult for you to find the targets you would like to buy at the low valuation? Because I guess that the service organization or consulting business exposed to AI or cybersecurity, which is the perfect fit for you, is not really valued at the multiples that you would prefer or have done historically, or where your share trades itself as well. Is that a limiting factor that the sellers would like to have too much? They always want, but
they want a lot. No,
especially these days, I guess.
I don't think the multiple per se is not the limiting factor as much, but it's still difficult. We're quite picky when it comes to M&A, and I'll explain why. One is that we want them to be complementary, as I mentioned. We want them to be profitable. We definitely want to be able to integrate these companies into our operations. So it's quite important that the way of working and the culture of the company is a good fit. So we want their team and our team to become one team, and it means that they need to have a good fit to each other. And so we put a lot of effort in just understanding, are we gonna like each other? It's simple as that. And then last but not least, we don't want to pay too much. And I think what we find is that a lot of those mid-sized companies have already been consolidated, so so we need to go down a little bit in size, and then they're typically owned by the original founder, and the founder is kind of looking back a year or two and say, well, I could have gotten this much for my company 2 years ago. I still want that valuation. So I think in their heads, particularly if you're founder and it's your baby, so to speak, they are still expecting a slightly higher valuation than the market might support. All that said, when we do slightly smaller acquisitions, the multiple is less impactful in when you compare to our own multiple. So we can still carry that. You know, our balance sheet is very, very strong. We're at no debt at this level. We are cash positive, so I think we can afford acquisitions quite well. Yeah.
And I had a question on that as well. I mean, you have a dividend every year. You have been able to increase it most of the years. You started a buyback program in November as well. You have a small net cash position. How should we think about capital allocation ahead? Is it most beneficial for your shareholders that you do the dividends and buybacks, or that you put it into M&A? Should we see the buyback program as kind of a lack of M&A opportunities in the market, or how should we see the mix, and what should we expect?
I think the biggest shareholder value is that we continue to deliver on our strategy, grow the company, shift the mix to services, and increase our EBITDA. We would claim that we're still a bit undervalued in the market, so there's an upside in the share price if we execute on that plan. But because we have a very strong balance sheet and we are cash positive, we can simply afford, and we have a good cash flow. So it's fair to also give a little bit back to the shareholders, both through dividend and buybacks.
True.
So we simply think we can do both.
Yeah, makes sense. Your biggest markets are, as we said, Nordics, Germany, UK are important as well, Netherlands as well. Who are your main competitors in these different markets?
So there are some regional competitors. So if you look at here, Sweden, there will be companies like IKEA would be a typical competitor. If you go to the UK, you would see companies like CDW. You go to Germany, you'll see companies like Bechtle and Cancom. So similar companies with similar backgrounds. They've grown up as what we call system integrators and are more or less moving into becoming services companies. But of course, there is another set of, let's say, future competitors growing up. More small companies are growing very, very quickly. More niched, more specialized, so they could be great in networking or great in public cloud consulting or great cybersecurity companies, but are growing quite rapidly and may become competitors in the future. They are typically smaller. It's a more fragmented market still, but probably growing at a decent pace.
I see. And then regarding cloud and the cloud opportunity, we talked about it many years ago as well, and then system sales have done better than I expected, at least. So it's still a large share of revenues, but I think cloud is important in the future. And cloud, you both have reselling of public cloud space, obviously, and then you have your own developed hybrid cloud or private cloud solutions for your customers. How are they growing versus each other if you think of the public cloud revenues and private cloud revenues, and like how much do the profitability differ between these two revenue streams for you as a company?
But that's an important part of the business. So the way I think to look at this is our legacy, our history is that we've been reselling hardware, software from typically American companies. It doesn't have to be American, but our biggest partners, NetApp and Dell, are obviously American. And then we add a lot of value-add services and complementary solutions on top of these solutions. So they become a bit of a platform for us where we can add value to our customers. The public cloud providers, so the Microsofts and the Googles, they have the same role in our business model. Yeah, we can resell a Microsoft cloud license and then we add value on top. We do consulting, we manage their workloads on top of the cloud, we do our own services on top of the cloud. The reselling part on public cloud, not hugely interesting from a pure profitability perspective. It's not something we push. Typically our customers already have the licenses because practically everyone is already a Microsoft customer and they already have their enterprise license agreements. So we'll see, I think the mix between the underlying platform, so the system or the cloud license is going to go down and our value on top will increase in ratio. And that's a good thing for us. That means we can focus more on our value add services, including our cloud services on top of Azure and Microsoft 365.
I see. I have a final question on the current market environment and the trends you see regionally. In the Nordics, how is the demand momentum right now? Germany is an important market that has been, or it was expected to start to soften a bit 1-2 years back. It hasn't really that much in other industries, at least. UK has held up better than expected despite everything around Brexit, etc. So what do you see in these three main markets today and core markets for you?
The core trends are obviously the same. The technology-wise and the underlying drivers are the same, but there are some differences in the timing of the markets. And there are some differences, I think, how the different markets have been, I don't know if the word surviving is the right, but managed or came out of the different challenges of the past year or two. And last but not least, we have slightly different positions in the market. So I'll give a concrete example. In Sweden, we serve very large customers. The largest enterprise in Sweden are our customers. In Germany or even in the UK, we would go more in the mid-size segment. So we have slightly different market segments and therefore slightly different behaviors. And then if you look at a country like the Netherlands, quite forward, just like Sweden would be in moving towards cloud, in particular in the mid-size segment. Germany may be a little bit more slow-moving, steady but slow. So we see some variations of timing in our markets, but the general trends are still the same.
Excellent. I think that wraps up our session, actually. So thank you very much, Jonas, for joining us in this interview. And for everyone that listens to this one, please feel free to reach out either to me at ABG or Jonas directly at Proact if you would like to learn more.